Hey everyone, and welcome to another FogCutter Live. I'm Mike Curtis here with Preston the Pirate James, founder of Traders Edge Network. We've been helping traders and investors just like you learn how to cut through the fog and noise of the financial markets since 2003. So Preston, like always, we got a lot to talk about. FOMC rate decisions, some big earnings names to discuss. There was some shuffling in the S&P 500. So why don't you say hello? We'll dive in and get rolling.
Yeah, we're doing this one a little bit later than normal on Monday. Maybe folks out there thought we were pulling a Notre Dame and just not playing
Bowing out.
and yeah. Anyway, tapping out. But no, we're here. We're here.
We're here. We're locked. Yeah. So last week, I want to talk about the FOMC. Want to talk about some of that, but let's look at last week first. So, the week of Thanksgiving, we had such a strong move higher. And then to kick off December, first week of December, we just kind of went into this holding pattern on the S&P 500, similar for the NASDAQ. And it was just really kind of a low volatility, nothing to see here type of week. And Preston, that we talk about how if the market covers a lot of ground, sometimes just some profit taking needs to swerve in. Sometimes a little bit of, a pullback needs to happen. Well, we covered a lot of ground and there wasn't really a pullback last week. It just kind of sat in really a pretty tight range, the markets did. And maybe you could speak to that a little bit, how sometimes that in and of itself can be a little bit of that breather. It's not really profit taking. It's not really the market dropping, but just chopping sideways for a little bit of, maybe a week or half a week, whatever it might be, can sometimes give the market enough time to catch its breath before potentially making another push.
No, it's true. And Mike, but just layering over this week on Wednesday, that the rate cut decision or no rate cut, but also what language will be spoken and not
Yes.
spoken, and postures held and not said and what's said. There's so much to read in to what will happen on Wednesday, but also again what the language is going to be. So there can be some real uncertainty heading in to weeks like this. So I think
Right.
that might be taking more center stage than anything.
Yeah, no, I think that's important to address because what happened, last FOMC meeting, they do these every 6 weeks. They always put out the statement, if they've cut rates, they're holding them the same, whatever it might be. And then about 20, 30 minutes later, then there's a press conference and the Fed chair gets up. So this 6 weeks ago, Jerome Powell got up to the podium and just said, hey, a rate cut in December is not a sure thing. In fact, it's far from it. And it kind of rattled the markets for a couple of days because that's pretty strong language. A lot of times they're taking this language that's really bland, plain, and this language kind of rattled, oh, maybe in the futures that price in the likelihood of an interest rate cut just absolutely started to tumble, and the likelihood of that rate cut really dropped. But then as we've gotten closer and closer to this week, they've kind of just inched higher and higher. There was another Fed president, one of these regional Fed presidents, that talked about how, hey, I think we're due for another cut. I think the data's given us what we need. And so that likelihood of a rate cut is building back up. But all of that backdrop just to say, Preston, I think this one people are really tuned into, right? It's a lot of eyeballs. It's always a huge announcement for the financial markets, but even more so, I think this one with some of this back and forth we'd had over the last 6 weeks.
Right. And what's being priced in now versus is there going to be a surprise and being reacted to after? So what we do know, like you've said before, we're not really sure what's going to happen, but we do know that the market was open today. It's going to be open tomorrow. It's probably going to have volatility in a week such as this.
Definitely.
And what also doesn't seem to ever take a break is when a company is added to the S&P 500, and then I guess you got to say someone's going to come off, and that's a pretty drastic reaction as well. But Carvana was a real star of the market today. We kind of backtracked
Right.
today in the overall market, but not Carvana, ticker symbol CVNA. And then I noticed the other name to be added was ticker CRH, and that's a company I'm less. Oh my goodness!
Look at that.
Look at Carvana.
Yeah,
Probably
on a day where the S&P's off 30 plus points, the Nasdaq's down about 70 plus points at the time. And yeah, that's just, you can see, I think some of that run up, some of the anticipation that this is potentially going to be added to the S&P 500. And then that happened Friday after the close. So we see the price action today. This is, and that, look at that volume candle. Are you kidding me? The volume
insane.
bar,
Yeah.
just so much attention pouring into this thing. So yeah, that's the type of news in the reaction to the news that we'll see if a company gets added to that S&P 500. And then say that other one again, Preston. CRH.
It was CVH.
Oh, CVH.
CVH. Victor. Yeah. I think that's what I had written down. Oh, I'm sorry. It's a CRH.
CRH. I think that's what you'd said the
It's
first
always
time.
important to get the right ticker symbols.
Yeah, double check. But yeah, that's the one I saw. There you go. Yeah. So again, another really big pop, 52-week high. Always really good news. And historically, those perform well after they've been added to the S&P 500. If you look 6 months, 12 months down the road, those stocks tend to have a pretty solid performance after being added to the
They're
S&P
forced
500.
to be bought now by forces that weren't in place before the
Right.
announcement. When you're part of this prestigious index, it's so tied to retirement funds and institutional money. And that's why the anticipatory jump, as it's being announced. It's not in it yet.
Right.
I think it gets included just down the calendar a little bit. Is that so? It was announced that they're going to join, but then
Right.
they actually join later. But that's this is
Oh,
the
there you go.
excitement of it.
Couple weeks.
December 22nd.
Beautiful.
And
No,
Mike,
that's
we've
good
got
stuff.
some earnings this week.
Yep.
3 names that stand out to me above all others is Oracle Wednesday after the close, which is the same day as the Fed announcement.
Mm-hmm.
And this big gap up higher back in September, that's when I believe that's when Ellison and we were standing with President Trump. They're making all these announcements. There's certainly been a pullback from that. So it's just interesting to see what they'll announce for earnings. Not only that, but what they'll announce for guidance going forward. Perhaps this one continues its turnaround. And we're talking about on the stock chart, right? I mean, the company's doing its thing, but I think it got a little overexcited there. So that'll be interesting this week. Adobe also after the close Wednesday, and this one struggled. As the AI thing is unfolded, there's a real question like, hey, I can just speak into my phone and have an image created. What do I need Adobe Illustrator for? All their little suites of, artistic, in that whole realm. And of course, Adobe's like, our AI tools are amazing. It's helping people anyway. So AI comes in here and really forces a question on pretty much every business. And I think that's why Adobe struggled more. We see April, which was the tariff lows. They rebounded a little bit after April, but not so much lately. So all the more important, in my opinion, are these earnings announcements and what these companies are going to be looking at and issuing for guidance looking forward.
Yeah.
And then the biggie heavyweight is Thursday after the close this week, Mike, which is Broadcom, ticker symbol AVGO. And they had a
another
really
huge
amazing
AI
day
name,
today.
right?
What I'm seeing more and more, there's and whenever you have an idea whose time has come, and clearly that in today's world right now is AI. I just noticed, Mike, that for example, Marvel MRVL, they just announced amazing earnings last week and guidance, and they gapped down today. But on the same day, AVGO gapped higher today. And the interesting news was I believe it's out of Google, saying, we think we're going to do Broadcom chips for this project over here. And Marvel thought that it was going to be them. So you just see some of this chaos as AI is rolling forth, where these companies are major players, but they're gonna have days of news where they get accepted and some other company's product is not. But I mean, we're in inning one of AI.
Right.
And all to say that you don't just poo poo Marvel because of this news. It's just, it's a feature of rolling this idea out, not a quirk that there's going to be good days and bad days as the jockeying unfurls and goes forward in this AI build out.
Yes, that'll be a closely watched one as well. Just a couple other on the earnings front to mention. Today after the close, so Monday after the close is Toll Brothers, right? A lot of eyes on the housing sector. It's such a big piece of just the overall economy. How interest rates have kind of slowed things down a little bit on that front. So I think that one will be closely watched. And then on just the consumer spending front, Thursday is also Costco and Lululemon, where as the Fed is making some of these decisions about rate cuts, a big piece of that equation that they're looking at is what's the health of the consumer spending. Is the economy still driving like it should be? And so I think even though we're really through the meat of the earnings season, it's a little bit heavier earnings week for sure.
Right? Yeah, it's always interesting to see, but man, Wednesday's a big one this week.
Yeah, it'll all eyes will be on that FOMC meeting. So Preston, let me ask you this: coming into a potentially volatile just announcement like that, right? And also it's a little unique because it comes out during the market hours.
That's true.
Right?
Yeah.
Where some of these economic announcements, they come out pre-market, and this one actually happens during the trading day. Are you approaching your trades any differently? Do you have any different mindset kind of coming into some potential volatility like that?
Um, no, I think all stocks are subject to this, and I'm either in long term stuff, which events like this iron out and you just get through them. But on the weekly side, Mike, and you probably know where I'm going with this, um, events like this get priced in. This uncertainty gets priced in
Right.
to options in this given week, where it inflates the value of them. And we are like in the money press strategy, we are sellers of that weekly pricing, which again inflates, gets fatter, if you will, grows. There's more cream or whatever in a week like this because there's that uncertainty.
Yeah.
And I'll collect it and say thank you very much, because we still own the protection on the downside.
Right. And that premium that you collect as an option seller, right? If you're selling the 100 put and you bring in a $2 premium, your break even, if the stock's trading right at 100, your break even's 98. You just the nature of bringing in that premium, getting paid as an option seller, you're getting paid that premium. That gives you some downside cushion. Like you said, Preston, just maybe to put some numbers on it, a week where there is potential volatility, maybe instead of getting just $2, you get $2.20.
Maybe you
And so
get
now,
three.
yeah, maybe even more. So then you've got even more, not just income potential, but more of that little bit of a cushion, if you will, to the downside because you're getting paid that premium. So now you can make a profit on our money press if it goes sideways, if it goes up, or even it goes down a little bit. That's what blows people's minds the most, I think, when they get trading the money press. From when they build the position, the stock's trading at maybe $100 a share. A week later, they go to adjust it. The stock's dropped $1. They go, oh my gosh, the stock's down 1% in this first week, and I've got a profit. My position is making money. Like, yeah, you brought in enough premium. So even though it's not a max gain for the week, you're still turning a profit where, your typical stock investor is looking at a little 1% hole they've now got to climb out of, where being that premium seller, being that option trader, we could actually see a small profit. And just like I said earlier, the thing could drop $2 and you're breaking even. Where a stock trader has a 2% hole they now have to dig out of to get back to break even, and even beyond there to profitability, right? So yeah, you can come into these higher volatility weeks with a little bit of that peace in mind if you've got your position structured the right way.
And I can't help but to add to that, Mike.
Yeah.
If you're in a money press already 5-6 weeks and you've been collecting these weekly premiums, you can get to a point, even after the magic zone is kind of being in these money presses 2 weeks, because you've taken in enough premium where your protection kicks in as well, where everything after that is like gravy, and the worst thing, the possible scenario could happen, and you're still ahead on the trade. So you get into a money press 5, 6, 7 weeks, you're way ahead. Then you come to a week like this, taking even more premium for the week, and it's like it could do whatever, and I'm good.
Right.
So there's nothing wrong with that.
Yeah, not at all.
Maybe you could even push the wrong buttons and buy the weekly one week. I mean, you've earned the right to do dumb stuff.
No, I love it.
Anyway, that's from the next linebacker speak right there, Mike.
There you go.
You
No, I love
quarterbacks
it.
are all organized. You got it all down. Neat desks, everything's anyway.
No, good stuff. Yeah, so we'll, obviously next week we'll have a lot to discuss, kind of the aftermath, if you will, that FOMC meeting. So, Preston, I got a really fun story from Simon G. I want to share before we sign off. But anything else from you before we dive into that?
Well, I just read an interesting Barron's article. To translate it in English, it says, well, basically, we talk about, Carvana added the S&P 500. Broadcom, all these AI rollout. Well, there's some real stinkers in the world too. And the gist of the article is basically into December, if you're in the bottom rung of performing for the year, we're talking stock wise, it's probably going to get worse, because what's happening is most likely there's going to be selling to bake in and to lock in those losses. And they just mentioned some company. They mentioned Trump Media and Technology, DJT. They mentioned Fiserv, that financial technology. That I think it had 2-3 gap downs this year. Ticker symbol, I think it's FI. They mentioned Restoration Hardware, which announces earnings this week. Interesting. Again, these companies have really taken it on the chin. Enphase, which is a solar name, Lucid, an EV group. So they mention these companies all to say, like, you should just wait till after December, because they'll probably likely turn around, but you don't want to get caught in the muck in December, and it's probably going to get worse because the powers that be are going to be selling these out and taking a tax loss on them.
Yeah, good insight.
So it's not the brightest note to end on, but it is true. We're in December.
No, it's true. Yeah, and I mean, anyone that's traded for a minute, they understand that, right? You've got a loss showing on the books. You close that before the end of the year. That loss offsets any other gains you might have, other positions. You're kind of banking that for the 2025 tax year. So, yeah, it's just the way of the world. So
that's right.
Awesome. Well, let's flash the story up from Simon. We love to share these. Usually it's, hey, look how much money I've made. This one I really love because sometimes it's not just about the profits. It can be about the journey, right? Enjoying the journey of learning a new skill, learning how to build up another potential income stream. And so Simon shares, he had kind of came from the school of hard knocks fuel. He said, I've been trading for a while now, but only really understood options. Started trading them heavily for the past 3 years. I've lost a lot of money in my trading journey, but I've also made a lot. My issue is consistency. And Preston, how often do we hear that?
Yeah.
Right? The consistency thing. And it's usually people just, oh, I'll try this strategy for a month or two. Let me try this one for a month or two. They never really settle in. Like I would always tell people, think of what an institution, how they trade.
Mm-hmm.
The system, the strategy, the position sizing, it is so built around a system, guardrails. Why are you doing it differently? Right. So it seems like Simon went through a little bit of that school of hard knocks, but is coming around. So he said, with the money press method.
Mike, can I just add one thing before you
Oh, of
because
course.
you're getting to the money paragraph from Simon here, but I believe the context here is he got turned on to options and he was trading them for 3 years, and then he's going to compare and contrast this with the money press. I just want to, I just can't get the story out of my head where because we've heard this, like you said, over and over and over, especially when people start learning options and they see how drastically options can move because they're leveraged. So if the stock moves 5%, the option might move 30-40%. And it just was wild. It could weird people out. And I remember a gentleman, not Simon, but someone else, saying that they started to become addicted to options. And they would wake up or they'd be at their office and they'd be staring up at the ceiling because they just couldn't take it anymore, memorizing the ceiling tiles on their above them where they work or where they live or whatever, because these options can get so crazy. And then when they learn the money press, how that turns around, where maybe they're not really knowing what's on their ceiling anymore. So anyway, that's all I wanted.
There you go. Yeah, the money press is powerful. It's all about putting odds and edges in your favor. These natural forces that exist anywhere, that exist anyway. So why not build a strategy around those? And over time, it's going to perform in your favor. So yeah, so Simon finishes up. He says, with the money press method, I'm really keen on my risk to reward ratio. I paper traded it for about 1.5 months and found it to be very profitable and consistent. That's the word we love seeing. I really like this kind of trading. Wish I had it when I first started trading. I'll definitely stick with it. So Simon, shout out to you. Glad you didn't give up on your trading journey. You took a few bumps and bruises, had some successes along the way, and now you're dialing in a strategy that hopefully will be long-term sustainable. So if you want to learn more about the money press, Preston will send you a free book. All you have to do is cover a little bit of shipping and handling. If you want to just go to freemoneypressbook.com, you can get your hand on it. See if the strategy is something you're interested in. See if it might be a fit for you. See if you want to find some consistency like Simon. You can go check that out at freemoneypressbook.com. But yeah, good stuff, Preston. Anything else as we sign this one off?
No, man. Just good to be back with you and excited for this week. And I want to say we so much appreciate you that tune in, and we just really value your time and your attention, and hope this is hitting you well and that you find a lot of value in this.
Yeah, love it. Good stuff. All right, well, catch us next week. We'll be back Monday. We'll be talking about the FOMC announcement. We can talk a little bit about some end of the year planning and some fun things like that. So have a great rest of your week, and we'll see everyone on Monday.
Take care, everyone.
See ya.